What's going on, guys? So today's video is a little bit different. It's not going to be a live trade. It's more of like an educational type of video. Um, so basically, I'm going to be talking about the differences between scalping, day trading, and swing trading. Um, I actually already recorded this, but my mic was off. So much for that. So I got to redo it. But regardless, the main difference, or like the actual difference technically, is the amount of time that you're in the trade. So when you're scalping, you're in a trade for a couple seconds to a couple minutes. I usually give it like 30 minutes. After that, I personally call it a day trade versus a scalp. If you ask a day trader, they might call a 30-minute trade a scalp. But for me, being a scalper, like anything longer than 30 minutes is definitely a long trade, so I call it a day trade. But regardless, a day trade is when you're in a trade for 30 minutes or an hour, 3 hours, 4 hours, but you close your position by the end of the day. The difference between a day trader and now a swing trader is that a swing trader will hold their position overnight. They might hold it for a couple days, a couple weeks, months, years. As long as you hold it overnight for at least one night, it's considered a swing trade. So there are some fundamental differences between the three, and one of the main ones is that scalpers look for the highest probability setups, even if it's a really small move, versus day traders, they look for kind of medium grade setups. Like out of the three, scalping is highest probability, then day trading, and then swing trading is lowest, in my opinion. But day traders, medium success rate for a decent move. Something realistic though, not like 1,000% move. But now swing traders, it depends obviously like what your strategy is, but swing traders, they're usually lower success rates, but highest risk to reward. So some swing traders look for hundreds of percent return overnight or over a couple days. But with those returns, that's not a guaranteed profit. You might lose, X amount of trades, like let's say 5 trades in a row. They all went down 50%, but then your next one's up 500%. For me, like I don't like that, so I'm a scalper, as you guys can tell. None of my videos are over an hour long, so I'm a scalper. So with scalping, since you have the highest success rate, it's usually the lowest reward. So you're not looking for huge moves, you're looking for high probability moves. So you might catch a 50 cent to $1 move, sometimes more than that. Those are usually like the really good trades. But you're looking for the for sure moves. You're not looking to there's a word I'm thinking of, but I can't think of. But whatever. You're not looking to like whatever. Like crystal ball the market pretty much. You're just reading everything very intensely. So since you're in for such a short amount of time, everything matters, a good amount. But day trading, you give your stock more time, so it has a lot of volatility on the way to your profit target or whatever. You might get 50% of the way there, pull back. Now you're 25% of the way, and then you push up 60, and then whatever. So until your profit target eventually hits. And then swing trading is there's really no risk management when you're swing trading, just because the market can dump overnight and you could be in calls. We can go to war with China overnight and then everyone's calls just go down. So that's that. So yeah, scalping, you are very tight on your stop loss. Day trading, medium amount. Swing trading, technically you have no stop loss overnight, just because you can't sell, at least if you're swing trading options, you can't sell overnight. But if you're in shares, you have after hours, so if you can catch it in that time, that's cool. But I mean, swing trading is when you hold it overnight, so whatever. um so a big determining factor of what trading style would be best for you is your personality. So if you're a scalper, you have to be a quick thinker. If you're someone who overthinks things, scalping, it can be for you if you fix a couple things, but you're gonna have that weight on your shoulders kind of thing. So, for example, let's say your intended stop loss is 7% on a scalp. Now you're down 7% right after you bought. Like, let's say you bought stocks going up, you bought, and it just immediately goes down. Now you're hitting your stop loss, and you're like, "There's no way like it happened this quick. Let me just give it a second." Now you're down 10%, 12%, 15%, and now you're like, you lost double the amount you intended on losing. So, scalpers have to be quick thinkers. They have to process all the information that they're looking at very quick, and then execute even quicker. So whether it's your stop loss or when you see red flags and you want to take profits, you have to be really, really quick. Because we're not looking for huge moves, and when you trade options, they're very volatile instruments to trade. So you can go from being up 5% to being down 10% in the same 1 minute candle. So if you're someone who overthinks things, you're gonna have to really try to improve that to become a profitable scalper. Day trading, you're usually a little bit looser with your risk, and you have a bigger profit target potential. So you give trades more time, so you have time to analyze to see what entry you want, and then give it some time to see when you want to exit as well. So you can, I guess, be a little bit of an overthinker. You should still have a strategy that tells you everything that you should know, so you know the right entry and the right stop loss every trade. But even with that, let's say you're a beginner and you're still kind of thinking, if you're hesitating as a scalper, it's going to hurt you. It can work out in your favor, but in the long term, it's definitely going to hurt you. If you hesitate for a couple seconds as a day trader, it's fine. Like, it's not really going to make too much of a difference. And a swing trader, hesitation doesn't matter at all. Like, you're literally holding overnight, so it's like up in the air. Like, the stock can move a couple dollars and it would probably not really matter. You're looking for like probably bigger moves. But what was I gonna say? Oh yeah, so some examples. Let me share my screen. Cool. Okay, so let's go to the 1 minute chart. So if you're a scalper, I don't even know, like, we didn't trade this stock today, but all right, you know what? Tesla. This is simple enough. So Tesla, let's say you're looking at Tesla upside. So, oh my god. Okay, you're looking at 260 break. I'll draw a line there so you guys can see it. So 260 is right here. That's 260. You could have taken this trade twice. So this candle went right to green. You could have got in here when it's turning green. Since you're looking for a 260 break, realistically you probably stopped out, so you might have stopped out here. And then let's say you took it again because we were strong right after you stopped out. You could have got in, let's say, here, and then sold here. So in this example, you might only be break even for the day, maybe slightly green, because this looks like a bigger move than this. But Scalping, you're not getting a huge move. So like literally from here, so it's like 40 cents, 30, 40 cents to the break. So that's like a dollar move. That's actually pretty good. Versus 259 to like an 80 cent move, 70 cent ish. So you'd be green on the day. But basically what I'm trying to get at is scalping, you're not getting a huge move. So something like this is actually a good example right here, which is perfect. So let's say you're looking for a bigger move. You see this candle go green to red, so let's say you get in there right at low of day, and then your stop loss is like maybe a little bit below low of day. All right, let's just say 257. That's a whole number. And then let's say you're looking for like a 3-to-1 risk to reward, or honestly 3-to-1 is pretty big. 2-to-1 is like standard, I guess, for day traders. Did it ever hit? Okay, let's bring this out. It might have actually. Okay, it didn't. So that's the thing I personally don't like about day trading. Or did it? So it did technically, but if you're playing same week contracts, you would have so much theta decay in this that you'd have like really. I think the only way you would have this would have been worth it is if you played next week's contracts. Even though we got so close here, let's say we did hit here, same weeks would have been fine. Like you would have done great, but it's just very risky. So as a swing trader, you might get super close to your profit target and it not hit, get super close to your stop loss and it not hit, and there's not technically enough telling you to get out. But as a scalper, there's like so many things telling me to get out at multiple points just on this move up. So that's the difference between, I guess, scalping and day trading. Now if you're swing trading, I don't know if there's going to be a good example here on this chart. Sort of a 1 hour. So if you're swing trading, okay, here's maybe something. Okay, so honestly that was aftermarket, so that doesn't even count. I don't know, but let's say we're moving up. We closed pretty strong this day. Oops. We closed pretty strong here, so you get calls, and then we open here the next day. This is like nothing to you. Even here when we open here, this is nothing. We open here, this is nothing. You're probably looking for, like 270 or 280 or 290 or something like that. So you can be holding a position for multiple days if you're a swing trader. Obviously depending on your plan and your strategy, but swing trading is, you don't technically have that stop loss because let's say something happened overnight. So if you got in here because we're strong, Elon Musk goes to jail, and then now we open here. There's nothing you can do about that. So I mean that's obviously an extreme example, but things happen, and if you're in a scalp and things happen, you can sell. But if you're in a swing trade and things happen, there's nothing you can do other than wait for the market to open the next day to make your decision then. But that's personally why I think it's hard to swing trade, is because the risk management is really not there. You have to be risking or willing to risk pretty much your entire position. Unless you're swing trading shares. If you're trading shares, swing trading shares, it's different. Obviously, because the stock's not going to crash 100% overnight. But options is, since it's such a volatile leveraged thing, swing trading is a little bit risky, especially if you don't know what you're doing. Scalping has the least amount of risk, but also the least amount of reward. So usually it's like close to 1-to-1 for, if you're risking $1, make $1, somewhere in that range, maybe a little bit over that. Day trading, usually they look for 2-to-1, 3-to-1, 4-to-1. So if they're risking $1, they're looking to make 2, 3, 4, sometimes more than that, which is why the success rate goes down when you take bigger risk to reward trades. But I kind of want to leave it at that. I don't want to get too crazy into it. I could just talk about scalping all day. It's already a 15-minute video. I don't know how I wanted this to be quick, but I'm really bad at that. So, that's pretty much it. We have a 3-day weekend this weekend. Enjoy yourselves. Go have fun. Don't think about the charts too much, but also definitely journal. Look at the mistakes you made this week and set up a plan for how you're going to fix those mistakes. And look at all the things you did right this week and try to implement that into next week. So, review your journal of the last week. If you've never reviewed your journal, review your journal for the last month, 2 months. That's definitely worth it. But that's pretty much it. I think I'll leave you guys at that. So I hope you enjoy your extended weekend. Peace.